Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. Now in this video we are going to be talking about pulse indicator. Okay, the indicator is a custom indicator, so you will have to download this indicator from an external source. You will have to download it from a reputable site. Make sure that you do not download it from a random site. One of the sites that I use is the MT4 marketplace. If the indicator is not available there, you can try out indicator spot. That is another site that I use. All right, so without further ado, let us get right into what we have for this video. Now, as you can see, the pulse indicator is gives signals by these arrows. Okay, I have already added the indicator to the chart. So the indicator displays signals in the form of arrows. Right, when you have an arrow beneath the candlestick pointing upwards, it's a buy signal. When you have an arrow above the candlestick pointing downwards, it is a sell signal. All right, so if you're looking to improve your trend trading, then the pulse indicator can be a good addition to your trading toolkits. Okay, it shows clear buy and sell signals, in the form of arrows. All right, and you can be able to use this to trade any assets of your choice. Okay, so basically this indicator gives you direct buy and sell signals. So you are the one to decide if you want to buy or if you want to sell or not after it gives you the signal. Now, I'm going to advise that whenever this indicator gives you a signal, whenever the pulse indicator gives you a signal, you should always confirm with any other indicator of your choice. All right, and then pay close attention to price action. Okay, pay close attention to price action. Make use of trend lines. Make use of support and resistance levels, support and resistance zones. The reason is that when this indicator gives you a signal, these zones, these support and resistance zones, and price patterns can give you confirmation, right? They can tell you if that possible reversal is going to happen. Okay, let's look at an example. Let us look at a very quick example. Here we can see that the indicator, the pulse indicator, gave us a sell signal here, right? And now this signal came around a resistance zone. Now, for the fact that there is a resistance zone here, it gives a layer of confidence that this sell reversal is likely going to happen. So when you use support and resistance zones, support and resistance zones are price points. There are price points on the chart, price levels rather. There are price levels on the chart where possible reversals do happen, where reversals could happen. All right, so in this case we can see that this resistance level serve as a confirmation, and then you can also use indicators like the moving average, for example, and add it to the chart for additional confirmation. You can also make use of the relative strength index. This is another indicator that is commonly used by traders, okay, for extra confirmation. Now let us look at another example real quick. We can see that we had a buy signal around here. Now in this situation, can we see that the arrow appeared just right below the candle, and shortly afterwards we can see that there was just a little upward move. Right now in this case, when the arrow appeared, the RSI confirmed the buy. All right, but shortly afterwards you can see the RSI pointed downwards. So this is a consolidation zone. Okay, and when you are in a consolidation zone, I'm going to advise to just stay out of the market. All right, we can see that the price is moving between this resistance and this support. The price is moving between this resistance and this support. This is a consolidation zone. All right, so when you want to make use of this indicator, I would recommend using it in a trending market. Okay, so in this case, now let us look for another example. In this case, we can see that we had a trending market here. We had a sell trend, and you can see the trend lines are used to identify the trend, and then you can also make use of moving averages just to confirm signals. Now we can see that the pulse indicator gave us a sell signal around here. The pulse indicator gave us a sell signal around here, and another sell signal came around here, right? So if we had entered a sell here, we would have considered entering a sell right after the confirmation from the moving average, and then we could have considered setting our stop loss right above the swing high. And for our take profit, you can decide to use other indicators to confirm your exit, or you can decide to use support levels to determine your exit. Okay, but make sure to always use good risk to reward ratios. All right, when you want to determine your exits, make sure you use good risk to reward ratios even before you enter the trade. For example, if we wanted to enter this sell trade, we should have calculated our risk and our reward ahead of time. So if we are risking about, after we got the confirmation around here, right? So if we are risking about 300, well, about 35 pips, if we are risking about 35 pips, our potential profit should be minimum of 70 pips, right? That's going to be 1 to 2. And we can see that this nearest support zone, this support zone is in about 77 pips. So that's a good catch. So if we had entered the sell here, setting stop loss above here would have been a good point, and take profit around here would have been a good point with a risk to reward ratio of 1 to 2 approximately. So that is a good one. Okay, it's very important to always use good risk management. All right, please make sure that you do not risk more than you can afford to lose, and make sure that you do not risk more than 2% of your capital in one single trade. Okay, it's not advisable to risk more than 2% of your capital in one single trade. Okay, now let us see if we can find any other example in a trending market. Okay, because this indicator is best used in a trending market. I can see that we have a lot of sell signals, but the buy signals are quite few. Okay, let us see if we can find, okay, this is a buy signal, but this is a consolidation zone again. And like I said, this indicator is not best for a consolidation zone because you're going to get false signals. As you can see now, this is a consolidation zone. We got a buy signal here, and there was not much buy movement before the thing sold, before the price came down. In this case again, we got a buy signal. There was not much price movement before the price came down. So you would have probably lost in this trade if you had set your stop loss below this candle. But if you had set it below here, then, well, you wouldn't have lost in the trade, but the price wouldn't move much. Your risk to reward ratio would not really be big. It will not be good enough. If you want to trade here, your risk to reward ratio is not going to be good, because imagine you are setting your stop loss at about 23 pips, and then your profit is about 23 pips. That's like 1 to 1 risk to reward ratio, and that's not good. Okay, so do not use this indicator in a trend in a ranging market. All right, instead use it in a trending market. Okay, so now we can see in this situation, this is actually a trending market, right? It's a trending market. So we had a buy signal here. And when you are setting stop loss, okay, please make sure you set stop loss below the previous swing low. All right, because in this situation, I can see we had a stop hunt here. Because this low was a little bit higher than this low, right? This low was a little bit higher than this low, but we had a stop hunt. So if you had set your stop loss below this low, your stop loss would have gotten hitting, and then price eventually continued in upward direction. So but something like this happens sometimes, and if you experience stop hunts, it's not exactly your fault. Yes, so it happens sometimes. Ideally, you should set your stop loss below the previous swing low. All right, so let us look for another example. Let's see if we can find another example real quick. Okay, all right, now we can see now in this okay, we have a lot of arrows here. Let's see if we can find another example. See if we can find another example here. Okay, we can see this is one example here, and we can see that this was a buy trend, right? A buy trend, and we had a buy signal from the pulse indicator around here. So if we had entered a buy around here right after the confirmation from the moving average, this would have been a great place to enter a buy, and then setting stop loss just below the previous swing low. And then for our take profits, we can target resistance zones for our take profits. All right, if you enter a buy here, set stop loss below the swing low, target the resistance zones for a take profit. Make sure you have a good risk to reward ratio when doing that. All right, it's very important. So that is it for this indicator. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.